Hey everyone, hope they're having a good day. My name's Andy, the channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Financial Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities and sharing those opportunities with everyone in the community. And guys, I try my hardest to get you the best opportunities that I can find, present those opportunities, and then you have to decide what you want to do from there. You can see how I'm doing it, how I'm playing the markets, what I'm buying. I just made some recent purchases here, which is on the website in the update. I just released a midweek update too, so you can see what I think are the best opportunities in the market and my opinions around them. If that interests you, sign up. Special is the coupon code. You can get savings on both the monthly and yearly memberships. It ends up being $25 for the first month on the monthly membership. And if you really like it, you can always sign up for a yearly membership, still use the special coupon code, even if you swap from the monthly to the yearly. It ends up being $500 for the year, whether you go directly into it or try it on the monthly and then go into the yearly. So gold is preparing for the next surge towards the $5,000 to $6,000 zone. A lot of people are trying to make these predictions. They're showing charts, patterns, all this stuff. I'm going to tell you the secret. Not that this is a big secret or anything, but interest rates are the driver. What interest rates do when they go up is that bonds are being sold. That's how interest rates go up. And then eventually the stock market will have problems at some point. And the number of alternatives to go into if bonds and stocks are out of favor narrows down to a few asset classes, gold being one of them, silver, platinum, commodities. And more money gets funneled to less options as interest rates go up and cross certain thresholds. Now, I am not stating that the threshold has been crossed yet. 5% is that threshold on the 10-year yield if you want to follow it. When we start getting above 4.5%, 5%, that's kind of that transition area. Watch what the stock market does. We're at very overvalued levels. We're at very undervalued levels for commodities and precious metals. So while these people, and this does look like wave one, if you guys want to look, wave one is this, and then you get this little hump, and it does look like we're going into wave three. The big deal is if you can figure out what is causing the patterns, then you know what the drivers are. You know what the leading indicators are. So if you know what the leading indicators are, and you know what is forcing humans to behave in such ways, then you know that you can look for those leading indicators and use the charts as a validation verification of what you are thinking. Way different than people using the charts to make deciding factors. Deciding factors, yeah, the charts will tell you something. But if you know what's causing the movement in the charts, that's ultimately the root cause of the movement and what's causing humans to behave a certain way. That is everything, in my opinion. So when I view the markets, I view it very different than everyone else. People call me crazy for some of the positions I'm taking because we haven't broken out of anything. We might be setting up a pattern that's very, very low, but if the valuation is at your back, and if you have these leading indicators already turned and in favor, then you can get aggressive. That's how you buy bottoms. It's not about the chart pattern, and although chart patterns do help tremendously, don't get me wrong, but you want both. You want this confluence of data and events occurring in the charts, in the market cycle, and in the ratios all happening at the same time. And that's where you get your work. That's where I get my conviction. But most people don't use those three things to gain conviction. Silver miners are printing higher highs. We're so back. The next leg will be the strongest yet, says Rock Bottom. And I haven't sold a single thing. I haven't sold my physical silver. I haven't sold or traded any of my mining shares. Um, a lot of people get really emotional on these moves. If we get a little bit of a pullback, they say, well, should I swap it to something else? My answer is no. Stay the course. I was just looking at silver as this looks beautiful as it breaks out here. But when you look at, say, something like XAU, which is the gold and silver mining index versus the SPX, look at this chart here, guys. This is a falling wedge into a double bottom, and we're just breaking out of this double bottom today. I want to let you guys know something. This here is the largest opportunity that you'll ever see in your life. This is in the making from 1980 back here, where it came all the way down. You don't get many opportunities like this in your life. You don't. And you have the opportunity to buy the bottom here, which we did on the website on a lot of those companies. All you have to do is sit and wait for this to go back up. Now, someone will say, I'm overweight something. I don't know, guys. This is the opportunity. It's a fantastic opportunity here. You might be up 6, 7, 800% in your companies. I'm letting you know that is absolutely nothing to what I think is coming here. Absolutely nothing. So I look at these charts. They make sense to me. They're very big picture, very, very long, like big picture, 50,000 foot view. This is going to take time. This isn't going to happen in 1 year. We're going to experience pullbacks along the way. But those who can hold on, I mean, this is like buying NVIDIA at the bottom of 2010, 2011, 2012, 2013, 2014. And then this is going to go up. And I think it's going to go faster than NVIDIA, because decades occur very quickly in short time frames in commodities. And you could do XAU to gold ratio too. And that's also, this is a big bottom here in the ratio, and it's going to break out. And it's going to do something where it's ridiculous, but people think that it just goes straight up. It's not that way. You're going to get pullbacks. It's going to grind sometimes. You're going to get consolidations. And what it does is it grinds everyone out. The people who buy here probably sell here, even though we're going to go up here. Do you realize how much of a gain some of our companies will be if this occurs? Like, it is outrageous, the gains that could be had here. Outrageous. And it's not going to be like the year 2000 to 2011. That was, let's go back, that was in a bottoming pattern in a declining interest rate environment. This coming is going to be ridiculous, in my opinion. So it's just a reminder that you own nothing even if you have a home. They grift you into buying a house, then hit you for $2,000 a month between property taxes and insurance. Not to mention whatever maintenance it's costing you. Home ownership has become a scam. Well, I mean, tell me that you're salty without telling me you're salty. My Lord. When you evaluate a house, you have to make an opinion, a judgment, a judgment call. You have to form an opinion, and you have options that you have to choose from. It's not that I buy a house or I don't. I have to live somewhere. So it's you buy a house or you rent. In my situation and the way that I wanted to set my life up, I chose to buy a house. I put some money down to have a very low payment. I refinanced it, and I live in an area that has low property taxes. My property taxes are $2,500 a year. My mortgage, just roughly stating it, is $1,000 a month. So I'm paying about, let's just say, $1,400 to $1,500 in total for property tax, house insurance, and my mortgage. in total. To rent this house, my guess is it's going to be around $3,500. So the way that I set up my life and the way that my options were to rent, those were the two options I had. And what I wanted to do is I wanted to lock in my costs in order to keep that low. That was my goal. My goal wasn't to necessarily own the house. I mean, that's a byproduct. But my goal was to lock in costs and keep them low. And I had to put some money up in front in order to do that. I had to put some money down. And I decided between those two situations and a long term outlook that I bought a house with low property taxes in a state that I liked and locked it in. That's what I did. And that's how I'm building more wealth than someone who is renting. Uh, Someone would say, well, you could have put that down payment into an investment. And it's like, yes, I could, but I also locked in a low mortgage, and the mortgage payment is being inflated away. So in 20 years or 30 years, when the end of the mortgage does come up, I'm paying literally nothing because the dollar is going to be 75% decline in purchasing power, and I'm paying it back with dollars that aren't worth anything. So I took today's loan, so to speak. Well, I guess it was back 5 to 10 years or whatever I bought the house 10 years ago or whatever it is. Oh my God, it's almost 10 years. But I took, money back then and took full purchasing power at that time. And then I'm paying the loan back with a depreciating currency. Guys, this is all important to understand. I mean, getting salty is going to get you nowhere. This is just garbage. You need to sit down and you got to say, well, what kind of situation am I in? What are my options? And what should I choose? And then you choose. And then if you always have the option to refinance if interest rates were to go down. If. Doesn't mean you're guaranteed. It's just you could if it does occur. And it occurred in 2020 and 2021. I refinanced and pushed it even lower. I dropped what is it? Probably about $500 off my mortgage by refinancing it. About $500 a month. So a lot of people, the numbers are always the most difficult when you calculate them today. And then when you look forward and you look out many years in the future, um, everything looks way more favorable to be buying. So I'm not saying that buying a house today, I don't know what the circumstances are. I don't know what state or city you're in. I don't know what property taxes there are, but they all, those all have to come into consideration when you're making this decision. Says there are decades where nothing happens and weeks where decades happen. We're not here for the pennies. Silver future is breaking out. This is silver future here, or well, I should say just spot silver. It's up quite a bit, 3.5%, ripping higher. It's at $53.30. Everybody gets all jazzed up. It's like we didn't know that that cup and handle existed on silver, and people are sitting here trying to time the short term. Totally stupid. This is not the time to try to time the short term. Like I read all this stuff on Twitter, guys, and I don't know. Maybe I'm just coming to the realization that everyone's an idiot. I don't know. Like I just look at this and it's like we've got a 50-year cup and handle. I'm very well sure that everyone understands that they have the 50-year cup and handle. Like this is I've seen posts of these people talking about this chart pattern. And they're over here, now is a good time to like get out of it. And we're going to get this intermediate decline and we're going to get this. It's like, oh my God, what are you doing messing around right here at the breakup? Like this is the time you just sit and don't do anything. And I just read these accounts and it's like, thank God I learned this for myself. Um, because if I were following any of these people, I would be so confused. I'd be like, what are we doing? Uh, and I'm not saying that I have all the answers. I'm not saying I know that, but what I do know is that you never lose your position when you're on the precipice of a breakout of a chart pattern this big, you never lose your position. And if you lose it, that is where it becomes the most difficult decisions that you have to make, because what do? You're going to chase? You're going to go buy it back? What are you going to do? And I know psychologically how hard it is to get out of a position and buy it back however many points higher or dollars higher. It's just, I can't do a psychology, so I have to stay in it. I know what I need from myself. So yeah, that looks fantastic. Housing analyst Melody Wright is predicting a price correction worse than 2008, with home prices potentially dropping 50% to match median household income. According to Zillow, 53% of all U.S. homes lost value over the past 12 months, the most since 2012. The median home price in October was that only 1.2% higher than a year ago. And then all this other stuff. This is the median sales price of homes sold in the United States, and it's been chopping sideways here since 2020. This is also chopping sideways from interest rates going up. I think probably affordability. It's also slowing down commodities, because a part of money creation comes from loans in the real estate market. So they slowed down the real estate market to stop bank lending, to slow down inflation. That's what Powell did. Now, if they lower rates, it's going to kick this all back up. And if we get a slowdown in the market. So what they did is they traded a slowdown to slow down inflation. That's what they're trying to do. Now, are we going to get a 50% correction in the housing market? I would say there's probably a 0% probability. Zero. Zero. Melody Wright is wrong. Why am I saying that? Well, tell me another time in history that we've had a 50% correction in the real estate market. I don't think we've ever had one. I went back and I looked at the U.S. Schiller. What is it? Hold on. U.S. Okay, so U.S. Okay, this is the price index, right? This is the Case-Shiller Home Price Index. From 2008 to the bottom, we had a total pullback of 35.56% in the Case-Shiller Home Price Index. She's saying that we're going to get a pullback, let's use her words, dropping 50% to match median household income. No, we're not. No. I mean, we need a gobload of bad loans in the system and get a whole bunch of forced selling pressure. I mean, a whole bunch to get 35%. We loaded the system with bad loans and they all went bust. You're saying that we're going to get a bigger pullback with not those loans in the system? No way. No way. I can't even find a time in history where we had a 50% pullback in the real estate, in residential real estate in the past 100 years. There's none. I mean, 1990 had like a pullback of like 0 or minus 1%. like this is a pullback of 1% right now, and we're calling for 50% pullback. I find that very difficult to believe. I would say she's wrong. In fact, I would actually say that we're probably going to go higher. So this is Lennar. Lennar is a home builder, and the fractal pattern that I see here is the same type of move that we have. Let me do this. Let me just get all this off here. We've got a sideways move here. We have a sideways move here. The fractal is a pattern that repeats over and over and over. 2008 was a head and shoulders topping pattern. It's right here. It was found or seen in the home builders, and there's your pullback, right? And she's saying that this is going to come. What I'm saying is, and I'm just going to show you where I think we are in the cycle. And here's another bottoming pattern, just so you guys. That's a bottoming pattern there, and this is a bottoming pattern here. It is the same bottoming pattern in both of these. It's a shoulder, a head, and a shoulder. This is a shoulder, a head, and a shoulder. This bottom here is the same as this bottom in the 1970s. So if I were to take this pattern of what I think is going to come. I'm going to have to adjust it. So this is going to be here, and then I have to adjust it down and lower because it's compressed a little bit. So here is the pattern there. It's just like that. And then I got to move this here. All right, so that's the pattern overlay that I think is coming. And we're going to go all the way up into 2029, 2030 is going to be the peak of my guess of the real estate market. And that is the cycle that we're seeing going, forward. So what's going to cause this move to happen? Well, this one here, it's basically at this location here from last to here. That was when they lowered interest rates and blew up the housing market here. So what we're going to do is we're going to get a slowdown in the market, which we're going through right now. They're going to lower interest rates, is my guess. They're going to have the dollar decline, and this is going to go up and do the last move in home builders moving higher. Um, I look at all the home builders, I see their charts, and they've got Livermore accumulation cylinders in a lot of them. And they're about to break higher with declining interest rates coming. So my guess is that she's not only wrong about a 50% drop, she is absolutely and utterly wrong, and that we are going to see a big boom in the real estate market when interest rates drop, and we're going to go up another 4, 5, 6 years, something like that. And that this could be considered a mid-cycle wobble that we would be exiting. And a lot of people are going to disagree with that. Even the people who follow, Phil Anderson and the other guy, what's his name? I can't remember his name now. The other guy who's with Phil Anderson, the Indian guy who lives in England. Can't remember his name. Forgot it. But that's where I think we're located, and it lines up with all the fractals. It lines up with all the patterns that I follow in terms of commodities. Lines up with all that stuff. So yeah, I think she'll be wrong in my opinion. Here's Henrik. Henrik Zaberg. He says, "Good morning. Please read carefully." And he's made a billion wrong calls. So this is the unemployment level. You can see we're going up. He's calling for a recession. He's got the never wrong indicator, which is the looks like a relative strength indicator or momentum. Either one, doesn't matter. Coming up above that red line, and we've got all these recessions, right? Um, could we get a recession? How does artificial intelligence fall into this with unemployment going up and companies making more money? I'm not exactly sure how this all plays out. But this is an indicator, and some people use it, and we usually get recessions when this goes up. So it's possible that we get a recession. But here's the thing. So he's looking at this is the what he's looking at. He's looking at unemployed. This is your employment level, and this is what he's charting. Um, there it is, and he's saying every time this goes up, you get a recession, and we've been heading higher. Obviously, if you look, it's been going on up. So he's calling for an acceleration move of some sort. Like these acceleration moves there. Could happen. It could happen. I'm not saying I know for sure. But here's the thing, though. You go look at copper, and copper is, this is Dr. Copper, the economy and stuff. Why are we up 4% in copper? Why is this breaking higher? There's a mismatch here. When you put unemployed, let's put unemployed here, and we can put it underneath. So usually what you see is you'll see copper like go down and drop and unemployment go up. That is like the indicator there where things are bad because copper is front running it. So copper front runs it, and then unemployment spikes. We can back out. We can see a couple others like here's copper dive bombing, and there's your unemployment going up. So you get this combo of copper dropping because the economy is eating it, and then you get unemployment going up at the same time. And then there's times where unemployment's going down and copper prices are falling. Here's another one. You can see copper dropping and then unemployment going up. That's a bad combination. So what I'm looking at is I'm seeing unemployment go up a little bit, but copper's breaking to the upside. Huh. Does anyone else see this? Now, not only does copper look like it's about to do something ridiculous, I'm going to grab that NVIDIA fractal. So this is NVIDIA here. This is the fractal that I grabbed, which is this. It's this move down here. You see that move? That was the consolidation before the breakout. So this here, this fractal is the consolidation. So I took that fractal and I overlaid it on top of copper. That's what this is here. If you want me to delete it, I copied the other one. And that's the fractal. And what I have to do is stretch it out for the time frame that we have. So that is it stretched out. And it's roughly the same fractal, the movement. So it's the pattern, the way that the pattern moves. So like this is this here is this here. Then we've got this guy there, this guy here. So that's your 1, 2, 3. And then this end piece is this end piece here. You guys see that? And this is 1, 2, 3. It's the same. It's the same pattern that humans go through when we trade these markets. And that happened right before we had a massive breakout in NVIDIA. And here we are right before a massive breakout in copper. It's ready to go. So when these guys are talking about unemployment going up, and I go look at copper, I'm like, that's not matching. I go look at steel, like SLX, VanEck Steel ETF. Does that look bearish to you? It's just breaking out, guys. It's just breaking out. That's not bearish at all. So why doesn't he look at other sectors? Why isn't he tying this all together? Lazy or doesn't know. Grady says we are all just a bunch of lucky people being here at this point in time, really, looking the right way, having the knowledge, knowing what to buy, seeing the future, and executing it well. And the move up from the lows the last 2 years are very strong and very profitable. So this is GDX versus GLD, and we'll get the breakout here. And people are asking, well, should I trade? Should I sell up? No, guys. This is just getting started. This is going to be the biggest move that you'll ever see in anyone's life. Now's not the time to be asking to rotate out. Just stay with it. That's my opinion. That's what I'm doing. I'm staying in it, going to ride this thing, and we're just breaking out. Again, 12-year long base. The bigger the base, the higher in space. Your base is this region here. And then you got your false breakout, shakeout, and then we're about to go. Now we are going, I should say. It's not about to go. We are going. We've broken out of all these things. This is a breakout, guys. So just let it go. And this is your launch pad. This is your launch pad here. So the volume's coming in. It's go time, guys. It's go time. Like, this isn't a time to jack around and try playing with short-term market movements. It's not the time. Watch out for Brazil. Yeah, we bought this whole bottom here on the website. Now people are looking at the breakout. Well, it's good that they're pushing the stock higher for us when we're already up 50%. Thank you for that. 20, 30% up, 50% if you got the bottom. Thanks for buying it, Sam. You're our liquidity. The silver space is one image. Most are overthinking it. This move has been decades in the making. 50-year cup and handle equals $100 silver. There's the dumb people with low IQs. The smart people are saying 50-year cup and handle breakout equals $100 silver. That's where I'm at. Well, at least I think I'm here. I'm in this group, either this one or this one. That's the group I'm in. Now, I'm definitely not in the middle here. Double top RSI overbought 5-minute bearish engulfing candle, positioned for a 5% pullback that never comes. The people doing the short-term trading, I just have to laugh at it. It's so not worth it. I'm in the camp that we are going to go much higher, and I would not be trading the short term here. This is where you're going to get screwed. This is where you're going to get screwed. I got screwed last commodity bull market trying to trade this crap, but I didn't know anything about the market. Now, if you're following this market and you've been watching it for years and years and years and years, and you're still doing that, you don't deserve the money. You don't deserve the gains. You did not learn from these big patterns how to play the big moves. So you don't make big money. You don't make big money if you don't know how to play big moves. It's the way it is. Peterbilt Financial, my coworker is 40 with two young kids, been living paycheck to paycheck, and has $5,000 in credit card debt. Never been on vacation as a family, just got a $5,000 bonus at work. He can finally pay off the credit card or can take the family to Disney. Which one should he choose? If you're living paycheck to paycheck and you have 5K in credit card debt and you get a $5,000 bonus, you, number one, need to create an emergency fund and get off the paycheck to paycheck. The family visit doesn't need to go to Disney. You just need to go to the local thing and hang out. Like, you need to build a buffer. I mean, this is just, I don't know, guys. I cannot live like that. Do you know how you want to get rich or how do you get wealthy? I'll tell you how to do it. Be scared of living paycheck to paycheck. Be scared of not having a buffer in the system. Um, it creates disciplines to some degree. Uh, I could never do this. I would be scared out of my mind if I didn't have, at least when I have kids, and I might be different. I don't know. I want at least 100 grand, at least, and building and building and building to provide a buffer between. I mean, in this case, they have zero buffer and they're negative. They're $5,000 in debt on credit cards, and whoever knows whatever expenses they have, if they own a house or whatever. I mean, you're like one paycheck away from disaster. I would I would be I wouldn't be able to sleep at night. I would get another job. I would just be ripping it. And I think that's how you get rich. Like it's the I'll try to rephrase it. It's putting yourself in uncomfortable positions and not tolerating that uncomfortable position. That there is a very uncomfortable position for me to ever be in. I would not tolerate it. So what I would do is I would work my living butt off to get in a situation where I would feel more comfortable. And not just more comfortable. It's about getting to a position where I have a little bit of breathing room. In his situation, this person, if they lose their job, they're going to be desperate as all get out for the next job because they have to take it, no matter what it is. What I did is I created a whole bunch of buffer room in my 20s because I thought this all through. I said, okay, if I build, 200, 300, 400, $500,000 cushion, and people say, oh, not everyone can do that. Well, get off your butt and start doing it because that's what I did. I didn't buy a Mercedes. I didn't buy a car on loan. I bought crappy cars. I maintained them myself, and I got SHIT done. It wasn't like, oh, I'm going to sit back and leverage up the credit card and leverage up my debt and have interest work on the opposite direction. So what I did is I said, you know what? I'm going to live like a monk for a while and do the things that I think add value to my life. I didn't skip out. You know, everyone in their stupid vacations, everybody's like, oh, we need to go on vacation. We need to set up a life that you don't have to escape from. Set up a life that you enjoy. Set up something that you like. If you're finding enjoyment in buying a bunch of crap, then I think you're going to have to figure out other ways to enjoy something. The things that I value most are not purchased. They are earned. They are figured out. Like I value people who are very smart. You can't buy yourself to be smart. I value people who have like incredible physical abilities. You don't buy that. That's built. You have to build everything that's worth anything. And most things, that are worth doing are hidden behind fear. So most everybody, what they want to do is they want to go buy some stupid crap that anyone can purchase. Anybody can buy crap. And then they try to show it off. And it's like, you know how stupid and like, how can I say it? How vulnerable you look to everyone. I see it when I drop my kids off at school and pick them up. I see people trying to like act all cool, driving certain things, and it just seems so stupid to me. And if you're living paycheck to paycheck, that is, I couldn't sleep at night. And maybe that's why I'm in the position I'm in today, is because I couldn't sleep at night doing what half these people are doing. I can't do it. And then I have the drive and the motivation to say, you know what, I'm going to get on it. And at work, when I was working the 9 to 5, I would get on it. I first was a really good worker. I was incredibly good. I was probably better than three other people combined. And it wasn't because of the skills that I possessed. I just did things so logically, and I would go in and I would just do things that people weren't thinking. And I don't know how it is. It just seemed obvious to me. And the value that I created with having maybe not as much skills as some other people, it's that went unnoticed to some degree. And that's where the disconnect was. Work is more about relationships and impressing your boss and you know uh, sniffing each other's butts and then saying that their butts don't stink. It's it's all like kissing butt and doing all that stuff, right? I went in and then I added a ton of value in my early years, and I just gave up because the value I was creating, although it was incredibly good, and I thought the system was more merit based, I never got a good return on it. So I said, okay, if I'm not getting the returns doing this, then I'll just not work as hard. And then that netted the same result. So really, it became into how could I work the least amount and get paid the most on a per hourly basis and then do something else on the side because it was not fruitful. And I don't like playing the political games. I'm just not a politics person. So I didn't want to do it. So I just would rather do something else on my own. So if you want to make it, you can't push the budget like this. You got to get on, you got to start buying assets, and you got to do it as early as you can. And then you create this big buffer between you and this big, bad, nasty world. And that buffer gives you options. It changes you as a person. So if you're this guy, you're desperate, you're needy, you'll take whatever they give you. They'll give you scraps, you'll take it because you have to. If you build a buffer of 100 to 200,000 bucks at least, I would say, and they cut your job or something happens at your job, you'll be like, that's bad, but at least I can just keep going. I can still play the game for many, many days and months and years longer. Then, if you get a crappy deal on a job offer, you don't have to take it. You can just say, you know what? I'll wait for the next one. You're not desperate. You're not needy. You don't have to deal with that crap. So, as you build wealth, that's the whole reason I built it. I built wealth so I wasn't needy. I came from a position of strength. I was arm wrestling everyone else for positions, and I would always win because I didn't have to do anything. I didn't have to take the job. I don't have to kiss up to my boss. I don't have to do anything. I am uncontrollable. And that's why they hated me at my job because I could say, you know what? I don't really want to do this. What are you going to do? Oh, we're going to fire you, or we're going to lay you off. We're going to do whatever. That doesn't matter to me. I'll be just fine. That's the position that you want to be in, the position of strength. And that's when you got to start saving as early as you can. Get investments, throw it in these investments, get the dividend income up, get the HSA going where you got a 50, 60, $100,000 HSA value. Get your Roth IRA, get your self-employed 401k or your 401k at work and build it. And then when they don't have control over you, when you've got millions of dollars, what are they going to do? Oh, we're going to take your job from you. Go for it. I don't care. Do whatever you want. I'm independent now. I can do whatever I want. And if I want to work over here, I can do this. And if I get paid a little less money, no big deal. It provides you options. It provides you strength, options, optionality. It gives you time. So when I read this, this is the exact opposite. This is like what I never wanted to be in that position. It's the exact opposite of what I just created. And I want to be over there. And you know, some people will change. They will change. When you get money and you have a lot of money, you're not going to hold back your opinions. Someone asks your opinion, you'll say, screw it. Here it is. You want my opinion? I'll give it to you. And if you don't like it, I don't care. What are you going to do? So I just saw this, and I hope no one's in this position. If you're in this position, I would be scared, and I would be getting out of it. I'd pay off that debt. I'd start saving. I'd save as much as I could. Then I'd start building assets as quickly as possible. And we already talked about silver and that ripping. Silver's ripping, cup and handle breakout, all that stuff. So that's where I'm going to end it, guys. Hopefully you enjoyed it. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special with the coupon code. That's all I've got for today. So we'll catch you next time, guys. See ya.